Hello all, today let's talk about what it means to buy a company's stock. Most of the people, when they buy a share of a particular company, they will think like they are working in that company, or maybe like they are some type of outsiders who are giving money to that company, or they will just buy the shares to make a quick profit out of that. These are all the misconceptions that we have while buying the shares. But today in this video, I will try to explain what it means to buy a company's stock. Please try to watch the video till the end. If you did not like the video, try to comment the reason. If the content is good, please do hit the like button and consider to subscribe to our channel Markets Analyzers. Try to share this video with your friends as well. So finally, welcome to our channel Markets Analyzers. In this video, I want you to really understand exactly what you are buying when you buy a share or a stock. Always remember, when you buy shares or stocks, you are becoming a partial or a part owner of the company. In a bit, I will exactly tell what you will own in that company. Even if you aren't understanding what I am trying to tell you, just hold on till the end. Everything will make sense. Let us take company A. First, let's write down their assets. Let us draw a triangle, company A. This triangle box indicates the company's assets. This company A have assets worth 1 crore. When we talk about assets, it is the same thing that we mean in the real world. Assets are the things that have value, things that are going to give us some type of future benefit. For example, if you own a house or an apartment, it is called an asset because they will increase in value over time. Along with that, they can provide you rental income as well. A brand for a company is also an asset. Cash is also an asset because it can be exchanged for the things we need in future. A loan to someone else is also an asset because in the future they will pay us back. If I get a loan, then it is a liability to me. If I give a loan, it is an asset. If I take a loan, it is a liability, about which we will talk in a second. But anyway, let's just in the very abstract sense say this is company A's assets, and let's say they are worth 1 crore. This triangle indicates company A's assets. These assets are the things that the companies own which will generate future value for them. Now let's say that company A has also borrowed some money, and maybe they borrowed from banks or by issuing bonds. Bonds is another topic which we'll discuss in upcoming videos. Let's say the company A has borrowed total money worth 70 lakhs. This is the total liabilities that the company has. Liabilities means the money that we owe to others. Now assets are worth 1 crore, liabilities are worth 70 lakhs. Now what's left for the owners of the company? A good way to think about this is what would happen if this company is sold and the debt paid off. If the company is sold, if the assets are really worth 1 crore, then they will be sold for 1 crore. If you get 1 crore, now you would have to pay the debt. So 1 crore minus 70 lakhs, you will be left with 30 lakhs. This is called equity or the owner's equity. This 30 lakhs is what owners will get if the company is sold off right now. This is also true with your home as well. Let's say your home is worth 50 lakhs, and if you still have 25 lakhs worth of mortgage or housing loan to be paid off, then you are left with 25 lakhs as equity. Assets are always going to be equal to liabilities plus equity. A. Assets is equal to liabilities L plus equity E. Now, when we say that I am a part owner of a company, that means that I have a piece of this pie right here. For example, let's say there are 3 million shares in company A. Company A has 3 million shares and their equity is worth 30 lakhs. How much is each share worth if all the numbers are true? Well, we have 30 lakhs worth of equity. 30 lakhs worth of equity divided by 30 lakh shares. Each share is worth 1 rupee. So, if we like this company and if someone is willing to sell us a share for less than 1 rupee, we would like to buy it. And if someone is willing to pay more than 1 rupee, we would sell it if we already have those shares. I hope you understood. Let me now show you an actual example of a company, the real world example. This is balance sheet of some random company. This is how an actual listed company balance sheet looks like. These numbers are reported for 31st March 2023. This is 2022 March numbers. Let us look at recent numbers. Just focus only on this column. You will find assets, liabilities and equities in balance sheet section and the company's financial documents. We are looking at these numbers only to understand how this works in real world. This is the assets section. The total assets are worth 53.07 crores. All these numbers are mentioned in lakhs. If we convert this into crores, we get 3.07 crores. You might be curious about these non-current assets and current assets in this page. Non-current assets means they are long-term assets like land, building, machinery. The assets which won't be sold in next 12 months are non-current assets. Current assets means they will be converted into cash within next 12 months. For example, bank deposits, short-term investments, inventories which they will sell. These are all current assets. So let us try to draw the same diagram which we drew earlier. Company A assets are worth 53.07 crore. Now coming to liabilities, this is the total liabilities for this company. It is worth 19.33 crore. So you might again be curious about what does current liability and non-current liabilities mean. Current liabilities means money they have to pay to others within 1 year. For example, short-term borrowings, money owed to suppliers, etc. All the things that they should pay off within next 12 months comes under current liabilities. Similarly, non-current liabilities means money which they want to pay to others after 12 months. It might be a long-term borrowings from banks or bonds. So all those things comes under non-current liabilities. So the total liability is worth 19.33 crore. Assets 53.07 crore. Liabilities 19.33 crore. So now the remaining 33.74 crore is the equity of the company. So you can clearly see in this diagram, assets 53.07 crore, liabilities are coming at 19.33 crore. So assets minus liabilities, the remaining is our equity. If you believe their equity is worth 33.74 crore, how much should each share be worth? Well, to know that, we should know total number of shares that the company has. So this total number of shares are got from their annual report. Total number of shares are 69 lakhs. It means the company has been split into 69 lakh pieces. If we divide total equity 33.74 crore by total number of shares 69 lakh shares, they have total of 69 lakh shares. If we convert them into crores, it comes around 0.69 crore shares. So 33.74 crore by 0.69 crore. Total equity divided by total number of shares, we get 48.89. Each share is worth 48.89 rupees. So if we get a share for less than 48.89 in the market, we can buy it. Or if it is trading for more than 48.89, we would consider to sell that. So I hope you understood what it means to buy a share of a company. This company had 69 lakh shares. If you buy all the 69 lakh shares, then you are the only owner of that company. Similarly, if you buy 10 shares, you are the owner to the value of the 10 shares you hold in that company. So friends, this brings us to the end of today's video. If you have any doubts, please do a comment. Consider to like the video if the content was informative. Try to share the video with your friends as well. Check out the videos in channel and try to subscribe to our YouTube channel Markets Analyzers. I will come back again with another interesting video. Until then, take care and have a great time.